Everything is down today, but one meme coin, the Trump token, is suddenly up. The question is why? Who's buying here, who's selling here, and how much longer can this rally last? Let's have a look at the data most people are not considering. Let's look at the on-chain data. Now, it's not just Trump that's going up. Trump is currently the most viewed cryptocurrency on CoinGecko. There's also Melania that's increasing a lot, even more than Trump. Trump is the most liquid token on the Solana chain. It's got more than 300 million worth of liquidity, more than 10 times the second largest token, which is the Pump token with only 21 million. It seems like this rally came out of nowhere. The CoinMarketCap AI doesn't give us a good reason for the rally. There's the news of a listed company called Newsmax buying both Bitcoin and Trump, in total $5 million worth of it over the next 12 months. But besides that, we only have a technical breakout, we've only got speculative accumulation, and 5 million worth of purchases that are even split between Bitcoin and the Trump token shouldn't really move the price that much. Really, the overarching story is this here. This is the Trump token relative to Solana. Whoever invested into Trump did worse compared to buying SOL. Trump underperformed Solana by 86%. This here is our recent rally, which is already starting to retract. Melania's chart doesn't look that different. Again, a long-term underperformance with a current rally that might deflate again in the not so distant future. But will it? Because here's the thing, this is the tokenomics of the Trump token. So price is always the result of demand versus supply, and if the supply grows faster than the demand, then of course the price has to come down, at least relative to Bitcoin, Ethereum or Solana. And the Trump token is just at its beginning of the token inflation journey. We started with 200 million tokens and now we are at 363 million. So supply has almost doubled, but it will double again and then double again. We will have in total 1 billion tokens within the next 2 years. The situation looks slightly different for Melania. Over here, we've already seen the team getting their token allocation and selling off 40 million worth of tokens every single month. The additional supply will go to the treasury and the community reserve. And it's very unclear when this supply will get sold. So really, if we wanted to bet on falling prices, doing this for the Trump token probably makes more sense than for Melania. Melania has the additional risk of being already quite small in market cap. The market cap is only 106 million, and at that size, it's relatively easy for market makers to manipulate the price. So if enough people are betting on falling Melania prices because of this chart, the market makers can just induce a short squeeze and push up the token very aggressively. This is much harder for the Trump token because, first of all, Trump has more outstanding supply that's going to get issued. But secondly, Trump's market cap is 1.5 billion. So it takes much more money to induce a short squeeze. Now we've looked at the supply over time. Let's have a look at the demand, as in the on-chain metrics. Who's actually holding the Trump token and for how long? Are the whales still buying into the token or are they dumping? What is retail doing? Let's have a look. Now in total, we've got almost 630,000 holders on the Solana chain of the Trump token. Let's first see what happened in the last month, where the token first dumped and then subsequently recovered and now starts to come down again. On the left side, we see the number of first-time traders versus recurring traders per day. On the right side, we see the number of token transactions. Both of those charts show the last month. We can see how the token transactions really spiked, not so much the number of traders though. So this is a first hint that this is not an organic rally. Let's zoom out a little bit more, right, where Trump tended to underperform a few hours after launch. Here we've got the trading volume in US dollars on the left, so that has pretty much died down on the Solana chain. On the right side, we see who is making up that trading volume. Small retail tends to trade the token less and less. The big whales have exited as well, so now it's just the medium-sized wallets that still trade the token on chain. And so what we see over here, that's the number of retail investors and medium-sized investors over time. Both wallet cohorts tend to still continuously sell the Trump token. There's no end in sight. What we're seeing here on the left is the number of wallets that have at least 140 Trump tokens. At the current price, that's roughly $1,000 worth of the token, and this continues to decline. In the middle, we go at 10x from that, so that's now 1,400 tokens or $10,000 worth of the token. Here, the selling has already stopped in the last few weeks. On the right side, we see the whales. So that's at least $100,000 worth of the token. At least the number of whales is not coming down. That doesn't mean though that they are not selling. Because if you continuously get a new allocation of new tokens, you might simply just sell as the proceeds roll in. And so when this is not an organic rally, if we see the number of token transactions spiking, but not the number of wallets going up, when at the same time we don't see more retail investors, more whale investors in the token, what's actually driving the price? I don't think that it's the spot market. I think it's the bets on the price. It's the perpetual futures. Because have a look at this. This is the spot trading volume in the last 24 hours. We had 322 million on Meteora. So that's a decentralized spot exchange. But then compare this with the perp market, the bets on the price. Here we had 1.5 billion worth of trading volume. And so you might remember roughly 2 weeks ago when there was this massive flash crash across all of crypto. That of course impacted the Trump token as well. The financing rates were massively negative because all the longs got liquidated. And still, since that day, the funding rate did not turn positive anymore. Here is how much Trump crashed during that liquidation crisis. More than 80%. So that event was much more meaningful compared to our recent rally. Because all of those longs got liquidated, the amounts of bets on the Trump token also shrunk. So the open interest went down. That is what we see here with this green area. We saw a massive crash and now no recovery in open interest. So there are not enough people that want to bet on rising prices of Trump anymore. And that's maybe what causes the market makers to create a bit of volatility in the price, just to generate a bit more retail attention and potentially induce some people to buy some Trump. There is correlation between open interest and the Trump price, right? Whenever there's more open interest, there's more bets on the price, more attention, the price tends to go up. Whenever there is less bets on the price tends to go down. The trading volume on the perps is still incredibly small, even given the recent volatility. And yes, a few shorts have been liquidated with the rally, but this doesn't seem to be a short squeeze. Otherwise, the ratio of long to short liquidations would be much more skewed towards the short side. And so I think it does make sense to consider betting on falling prices of Trump again. We might see a secondary short squeeze because this one didn't really generate enough attention. If we do see that secondary short squeeze and we get closer to the upper end of the trading range, I might enter and go long Solana and short Trump, essentially betting that this chart will continue to go up. And that's again based on the tokenomics. That's based on the fact that the insiders continue to cash out and dump on retail. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends it over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest, issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stablecoins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk on volatile cryptos and from volatile cryptos back into risk of stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices. And that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we're getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stablecoins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much, much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. Then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors. And that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents, because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61%, ApeCoin. And this is much more in line with this picture over here, right? charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well. This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost average into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back. No questions asked. Now, I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time, Bitcoin lost 9%. Now, unfortunately, this capital pool is already closed. But if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member. But if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $200 $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.